Hello there, you're watching Cybos TV. Thank you for tuning in. I'm Daisy McAndrew, delighted to be your host for today and the rest of the week here in the Boston Convention Center. Well, this is our last session of the day today on Cybos TV, but we are tackling a very big subject. We're looking at financial crime compliance and the key trends therein. So to talk about this very important subject with me, I'm delighted to have been joined by Lisa Lansdowne-Higgins to my far right. Lisa, welcome back to the show from RBC. Bob Werner, HSBC. Welcome, Bob, and thank you for finding us the time. Jeffrey Harwin to my immediate left, Barclays Bank, and on my far left, William Langford from Citi. Welcome to you all. Obviously, this is a very big issue, a big session, and a big topic, I'm guessing, for the whole of Cybos this week. Bob, if I can start with you. We've seen an increase in punitive fines. What do you put that rise down to, and are there unintended consequences from those fines?
I think we have seen an increase in punitive fines, primarily because the regulatory landscape continues to evolve. We've got increasingly complex programs, more aggressive enforcement, much higher level of expectations imposed on financial institutions. I think it's really not just about the fines, it's primarily about the reputational risk that poses to financial institutions. And the fact is it does have collateral consequences. It's causing financial institutions to revisit their risk appetite, to recalibrate along a much more conservative line, and to frankly exit relationships that can't justify the enhanced control infrastructure that a bank is now expected to apply. And that's resulting in banks really contracting their willingness to bank money service businesses, charities, embassy accounts, even the scope of their correspondent banking relationships, all of which has an impact.
And do you think those, the policymakers, legislators, the regulators, do you think they're aware of those consequences? It's very tempting to say it's all political, the politicians are fools and they don't know what they're doing, but do you think they are aware of what the consequences are?
I think they are aware. However, I don't think that anyone has developed a solution, because you've got a tension now, even within governments, between regulators who have their own political pressures and scrutiny that's applied to them, and policymakers who, frankly, from a pure policy perspective, may see the issue and want to address it, but they can't really figure out exactly how to adjust the regulatory landscape to do that.
And Lisa, if that's the world, albeit an imperfect world that we are living in, and for now we're going to have to survive in, what can a financial institution do to determine if its own control environment is reasonable and sufficient?
Yeah, no, when I look at it from my area of expertise, from an operational perspective, I think it's a balance. It's a balance between our traditional models, which is a lot of oversight, controls, from a monitoring and an audit perspective, but it's also really collaborating with our compliance partners and looking at what the risk policies are, coming back constantly to evaluate what our risk appetites are, so that we can make the changes that we need to in order to make sure that it is effective and that we have the right due diligence and oversight, and we've empowered the teams the way we need to in order to take action. So I think it's a mix between the two, and it's certainly evolving.
But do you agree that some of those changes that companies, firms either feel they have to or feel they want to put in place are sometimes not good for the wider environment, those changes?
Well, actually, I always laugh and people really chuckle when I say things like this. One of the positive unintended consequences is really about reinvestment from an operational nature perspective. Traditional models 10 years ago would have said that people really didn't understand what was happening on those front lines and those individuals that were in the trenches. But now we've actually been able to, from a top down with a culture change, get investment into technologies that helps us and enables us to be much more proactive and ahead of this, as opposed to always being on the heels and reactive.
Yeah, that's true, I suppose. When we talk about unintentional consequences mostly being negative, or sometimes, often being negative, but sometimes they can have a positive impact to involve everybody in these difficult situations. I wanted to move on to sanctions, which hasn't been mentioned yet. I mean, what are the impacts of sanction requirements, like, for instance, with Russia?
So up until the new Russian sanctions are different than most other sanctions that have been imposed. Up till now, they've primarily been list-based. The government, OFAC or the EU will deliver a list of names that we can upload into filters. What changed with the Russian sanctions was they focused on entities, areas of business that needed to be changed, the types of business that we could do with particular customers. So we couldn't necessarily take those names and just upload them into our filters and stop payments, which normally, what sanctions compliance has generally been about. So it forced us to interact in a much greater way with the business. We need to work with credit risk and market risk, understanding the breadth and scopes of products and services that we were offering to those customers to make sure that we were complying with the sanctions appropriately.
So I'm guessing there are positive ways that financial institutions can react, as you were just saying.
Yeah, I think it's not only the way we react, but I think the way we interact with each other within the financial institutions and among the industry. So when sanctions such as Russia come out, which are new and have not been issued in this way before, you'll see the industry come together to try and figure out and benchmark with each other around what the right solutions are. There's also a significant amount of interaction with OFAC and the EU regulators as well to understand what the breadth and scope of those sanctions are.
And when sanctions are being put together, I mean, this is just a question really for my own curiosity, are the banks and the experts asked for advice on how best to put those sanctions in? Is that how it works? Because presumably if a political entity, whatever it might be, an individual country or UN, says, right, we're slapping sanctions on this they might not know the full consequences because they're not the experts, like you're the experts.
Yeah, I mean, I think there's probably some level of consultation. Bob was at OFAC, he may be able to comment a little bit more on that, but for the most part, sanctions will come live for us, and then the next day we're expected to comply,
bang.
Which is a very high standard
Very difficult.
to operationalize the sanctions that are issued by a variety of governments around the world.
Yeah.
I think Jeff's exactly right. The OFAC, when they think about how to impose a regulatory scheme, they're looking at what they want to achieve from a national security foreign policy objective. They're not necessarily focused on the bank's challenges in implementing that. I think that's gotten better over the years, and Adam Zubin, the director of OFAC, has tried to engage in outreach with banks to educate them. But frankly, we often don't know the impact until we go to implement the regime. And some, like the Russian sanctions, have proven to be very, very difficult. And they're having an impact on the services we provide our customers because we have to stop payments. They have an impact, again, on the sort of risk appetite we're willing to engage in terms of products and services to a certain region. And I mean, all those things become very complex and nuanced and are difficult to anticipate prior to a release of a program.
Absolutely. Well, something else that's difficult to predict and anticipate is big data. We've been talking about it so much this week. We're clearly going to continue to talk about it. But in this context, William, how does big data fit in?
Sure. I think it's helpful to think, you got to understand first that for compliance today, the more data you can get your hands on, the better. It's going to fuel everything that we do. It's equally true that the data spread across global financial institutions is not always in the perfect shape, may not have been captured for the right reasons at the time that you're now going to use it. And so as we think about it, we've said before that the one thing worse than not knowing something is to have a piece of information in your possession that you don't realize you have, that later on they find out you in fact should have known what you already held your hands on. So the thing about big data is that conceptually, the quicker, better, faster, looking across disparate data sets without the need to create the structured databases to retrieve it is fantastic. And again, at a high level, you think that's about the best thing to come along since sliced bread. The challenge that we have is the same challenge we have if you're creating a structured database, which is you still have to have data that's fit for purpose. You have to know what it is, you have to understand the data, how it was captured, why, the structure, et cetera, to make sure it lines to what you're searching for. And we had a discussion earlier today about data privacy, data protection, because that too, while certainly there are good reasons for such rules and laws to exist globally, they can really slow you down if you're trying to look across data to try and pull information out to the extent it runs afoul to any limitations that particular jurisdiction may place on it.
Well, I'm fascinated to know all of your sort of opinions and experience of big data, but I'm guessing, Lisa, of everybody here, you're the most experienced in big data, but not necessarily for a compliance issue.
Well, I think what's really interesting about big data is it still is the new topic. And I would echo the comments that William made. It's really about how do you get structured into the data, because that's always been the biggest challenge. You have all of this data that we can mine across our financial institutions, but how we get there. So some of the new technologies that are coming in from an open architecture perspective that allows us to have insight into it is, I think, really what we're going to see in the next couple of years. I'm not sure that anybody's really mastered it well. I think we continue to grapple against our legacy infrastructure, but lots of the new open architecture and some of the middleware that's in there allows us that information in real time that helps us to make decisions and take action and be empowered.
Bob, how does it look from HSBC perspective?
Well, we have over 50 million customers. That's a lot of transactions.
That's a lot of data.
A lot of data. The challenge is, as William and Lisa have said, is figuring out how to bring it together in a way that's compliant with privacy laws in all the jurisdictions in which we operate, and also takes advantage of a common architecture that can create access to that data in a meaningful way. And it's a challenge for large institutions, particularly ones that didn't design their systems with compliance in mind, and now we've had to evolve to accommodate that.
And of course that's the difference. Sometimes it's evolution and sometimes it has to be something more dramatic if you realize that the system you've got in place simply does not fit the purpose, doesn't fit the job in hand.
Yeah, I mean, I think Bob makes a great point, right? Many of the systems we're working with and the data was collected years and years ago. And it's bringing those systems up to what's expected today, but also making sure that the data is clean, right? So we need to get good customer data. And who owns that data within the company also becomes a big challenge for us. Yeah. You know, as compliance, professionals, we don't have customer relationships. We don't own the data around those relationships. It's within the business. So we're dependent upon the quality of the data that's in other places within the firm to do what we need to do.
Absolutely. I'm going to ask you all just for the last minute or so to look in your crystal balls. I'm going to start with William. If we were all sitting here, the five of us, this time next year, Cyborgs 2015, having a chat about financial crime compliance, in what ways do you think the conversation will have moved, or what will we be talking about, or will it be the same issues, do you think?
I think we're still going to be grappling with these new style sanctions that we're seeing out of OFAC, the sector specific, and that'll be a topic. Hopefully we'll evolve the discussion more and have a better sense on how best to attack it from a compliance perspective. Hopefully the temperature will have dropped, something Bob you had mentioned earlier, where right now it is still a very white-hot environment in compliance, and I look forward to a time where you can continue to the build phase to meet expectations, and then be able to have a deeper policy debate on some of the directions that we're headed in compliance.
Okay, lovely. Jeff, are you optimistic or pessimistic?
I think I'm optimistic. I think I'm seeing a lot of ownership within the business. And I think we're starting, hopefully, to see education more for the regulators. I also think this time next year we'll probably be talking about Bitcoin and virtual currencies and how we're going to manage AML compliance in the context in that space. And then maybe some of the underlying technologies that underpin those types of virtual currencies that may be able to assist us in the work that we're trying to do.
Lovely. What are we going to be chatting about this time next year?
I think it'll be a very similar conversation, and the question will be how much progress we've been able to make. I still think
we're going to be banging our heads on the table.
We're still going to be talking about data challenges. We're still going to be talking about expectations that we know our customers and identify nested relationships in correspondent banking. And we're still going to be seeing innovative sanctions programs that challenge our ability to operationalize and accommodate them. So
Lisa, what's going to be in your top of your in tray, do you think? What are we going to be?
Top of my in tray? Well, I'm not sure that the geopolitical issues certainly are going to, I'm hoping the temperature does dial down a little bit, but we don't know what we don't know. So for us, it's really that continued reinvestment. It's the continued conversation. I think what I'm really happy about is that operations is actually at the table now as part of the discussion, where traditionally or previously we might have been more of an afterthought, and being able to take the regulation and actually put it into the front lines is really my key aspect and challenge.
Excellent. Well, I'm delighted we've ended on a positive note, bringing something in from the cold to put it centre stage. And on that note, thank you for sharing this stage with me on Cyborgs TV. That is it for today, but my sincere thanks to Lisa Lansdowne Higgins, Bob Werner, Jeffrey Harwin and William Langford. That's it from me, Daisy McAndrew, for today. As I said, we'll be back 8:30 tomorrow morning, looking through the papers, looking to see what else was achieved and discussed today at Sibos 2014. And also to those of you who are taking part in the 5K Sibos run tomorrow morning at some unearthly hour, I wish you the very best of luck. Goodbye and see you tomorrow.